Hello everyone, my name is Dan and I have a super exciting video for you all today because in this one I will present you the ICT Silver Bullet Strategy, a strategy that could help you quit your job in 90 days. So if that sounds interesting, let's get right into it. Alright, so ICT himself said that if you're able to master this strategy, you could potentially quit your job in 90 days. Statistically speaking, that is possible, but of course, it is not easy. And in my opinion, if you don't have at least 6 to 12 consistent profitable months on your live account, you shouldn't consider quitting your job because it could get mentally really tough, and because of it, you will then make bad decisions. But in this video, I will go over every single step of this silver bullet strategy and show you how easy it is to trade it every single day. So the beauty about this strategy is that you would only need to take one setup every single day and only spend 1 hour on the charts every single day, sometimes even less, and I will show you exactly why. Okay, so let's first go over our set of rules that we need to follow in order to trade this strategy successfully. So the first one is that there's no daily bias needed. Okay, so this is not specifically a rule. This is something that we need to be aware of. Okay, so for this specific strategy, we don't need a daily bias. Okay, so we don't care if we are in a bullish intraday trend or in a bearish intraday trend for that specific day. The second thing are the pairs that we trade with this system. So these suggested pairs are Euro USD, GBP USD, NES 100, and SPX. For this video, I will use GBP USD, but after you watch this video, you should go ahead and backtest all these 4 pairs, okay? Next up, we will only use the 5-minute time frame, okay? So no 1 minute, no 15-minute, only the 5-minute time frame, okay? Next up, like I said, we will only take one setup every single day, one setup, and that's it. We will look for trading opportunities between 10 and 11 a.m. New York time only. Okay, that will be our interval where we will look for setup and place trades. Okay, only between 10 and 11 a.m. New York time, which is UTC -4. As y'all can see, I am UTC +3. So 10 a.m. New York time will be 17 or 5 p.m. My time. Okay, UTC +3 or 3 p.m. UK time if that's easier for you. Then for entering a trade, we need to wait for a fair value gap to form, and then we will place a sell or a buy limit on it. That's exactly how simple it is to trade this strategy. And of course, we will jump into some examples in 1 minute. Okay. And then lastly, we either aim for liquidity as targets or we use a fixed 1 to 2 risk to reward ratio. Now, this will be totally up to you. There's pros and cons for both. A big pro for aiming for liquidity is that often you will get a bigger risk to reward ratio. But of course, you will also have a smaller win rate because of that. Okay. A big pro with the 1 to 2 risk to reward ratio is that there's no thinking for you to do really. Like after you see the setup, you just place the buy, the sell limit, you place it at 1 to 2, and that's it. You know, you don't have to look for liquidity and use that as your target. Okay, so it's a lot simpler to follow the 1 to 2 risk to reward ratio route. So if you're a beginner, especially with ICT strategies, I would suggest just using a fixed 1 to 2 risk to reward ratio. Overall, it will be a lot easier, okay? But like I said, there's pros and cons for both. You gotta ask yourself if you wanna have a bigger win rate or a bigger risk to reward ratio. If you wanna have a bigger risk to reward ratio, then aiming for liquidity could be the better solution for you, all right? So now let's get into some examples. But before we do, I just wanted to let you know that if you wanna see the SMC trades I am taking every single day, you can do that by joining my SMC trading group. It is the first link down below. Feel free to check it out. Okay, so now I will literally use this strategy on the current price section. I will see if there was any setup today, sorry, because there's only one setup every single day. I will also check for yesterday. Yesterday was Monday, and I probably will check for the previous week on Friday as well. Okay, I'm just gonna go through maybe 3 or maximum 4 examples to show you exactly how to use this strategy. Okay, so first things first, let's use the bar replay. And okay, we are using the bar replay so that we can start exactly when we need to look for setups. Okay, so we brought the price action back right here at 5 p.m. my time, okay, because that is the equivalent of 10 a.m. New York time. Okay, so this right here is when we would open the chart, and this is where we would start looking for fair value gaps. Okay, so let's get right into it. Let's play the price. I assume that you already know how to identify fair value gaps. If you don't, then make sure to stick till the end, because you'll most likely understand how to identify fair value gaps from this video. But still, if you find it hard, I have a specific video only for fair value gaps on this channel. So after you watch this video fully, you can go ahead and watch that one. Okay, so let's look for a fair value gap. There's no fair value gaps here. Okay, so we still continue to play the price. Okay, no fair value gap there as well. Let's continue, and boom, we finally have our fair value gap. Okay, so we have these 3 candles. This is the first one, the second one, and the third one. And we can see that the high of this first candle doesn't overlap with the low of this third candle. Okay, so we have a fair value gap right here. Okay, this is our fair value gap. Now we will place a buy limit on this fair value gap, and the stop loss will be below the low of the first candle. Okay, below the low of the first out of the 3 candles. Okay, because we need 3 candles in order for a fair value gap to form. Okay, so super simple, super systematic. And for this video, I'm just going to use the fixed 1-to-2 risk to reward ratio method. Okay, so we are in our interval. Okay, this is 5 p.m. Okay, and till 6 p.m. we would look for setups. At 5:45 p.m. this is where we got our setup, because this fair value gap formed. Now we placed the buy limit, the parameters, and now we are pretty much done for the day. We just need to see how the trade plays out. Okay, so after that, let's see what happens. Okay, so we got triggered there. We faced a bit of drawdown, but let's play the price and see how this trade played out. And as we can see, okay, nice, we have a take profit. Okay, so this is literally today. Okay, this is literally today. Let me exit the bar replay, okay, so that you can see that this is literally from today. Okay, now let's go and see if we would have had any trade yesterday. Okay, any setup. So yesterday was Monday, the 7th of August. Okay, so let me quickly scroll and bring the price right here at 5 p.m. my time, when I would start looking for fair value gaps. Okay, so it's 5 p.m. We have a very clear fair value gap here. Okay, this is a super clear fair value gap, but because it's before 5 p.m., I won't take it in consideration. From now on, I will start looking for fair value gaps. Okay, so let's play the price and see if we will identify a fair value gap, and looks like we are. Okay, so check this out. The high of this first candle doesn't overlap with the low of this third candle. Okay, so we have a fair value gap right here. Okay, so we identified our fair value gap in the first 15 minutes of our trading session. Okay, so after that, we will just place the buy limit on the fair value gap. The stop loss will be below the low of the first candle, and the take profit will be once again at 1-to-2 risk to reward ratio. Okay, if you were aiming for liquidity, you could have aimed for this high, but like I said, for this video we will use the fixed 1-to-2 method. Okay, so now all the job is done. All the job is done. You have your setup. You will now place your buy limit, and then at 6 p.m. Of course 6 p.m. my time, 11 a.m. New York time, you will check to see if the trade triggered. Okay, because if it didn't at 6 p.m. or 11 a.m. New York time, that's when you should delete your setup. But let's see if this trade triggers. And okay, it triggered right after 5 minutes. So now we are in the trade. Okay, we face a bit of drawdown. Okay, but now we have a reversal. We are running in profit, and okay, take profit was smashed right there. Okay, so we have another win with this strategy. Okay, so we have two wins. One literally from today and one from one yesterday. Okay, so far we had a trade every single day. Okay, there will be days where there will be no setup because A, maybe there will be no fair value gap, or B, maybe there will be a fair value gap, but your setup might not get triggered, okay, within the interval. So let's just look for one or two more examples, and that will be it for the video, because I don't want to make it too long. I just want to show you how simple this this system is to use. Okay, so let's break the price right here on Friday at 5 p.m. my time. Okay, 5 p.m. my time. So let's play the price and see what happens. Now look, if this is 5 p.m. Okay, boom, we have a fair value gap. Okay, we have a fair value gap. The low of this candle doesn't overlap with the high of this third candle right here. Okay, so this is the fair value gap. We will place the sell limit right here, the stop loss above the high of the first candle, because like I said, we need 3 candles in order to form a fair value gap. Okay, and the take profit will be at 1 to 2 risk to reward ratio. Okay, so let's see how this trade plays out. And of course, if you like what you see, make sure you are subscribed to not miss out on future uploads like this one. Okay, and also feel free to share and like the video if you find it valuable. So let's play the price. Okay, we have an instant trigger of our sell limit. Okay, we are currently running in profit. Oh, we are facing some drawdown, and we have a stop loss. Okay, so we have 2 wins and 1 loss so far. Okay, of course, you will also get losses with this strategy because there's no 100% win rate strategy, but trust me, this system has a really solid win rate. Okay, for a 1 to 2 risk to reward ratio, it has around I would say 50 to 55% win rate, which is super solid. Okay, so this is Friday. Let's just go through one more setup, through one more day, and see if we get a winner and if we manage to finish the video with a winner. Okay, so let's look Thursday, the 3rd of August. This was literally last week. And let's bring the price here at 5 p.m. Okay, so this is when we would start looking for fair value gaps. All right, so okay, let's see, we could have a fair value gap, and yes, we do. Yes, we do have a fair value gap. Okay, we zoom in very closely and we can see that this is the first candle, this is the third candle. Okay, the high of this first candle doesn't overlap with the low of this third candle. Okay, so right here we created a fair value gap. Okay, we will draw it right here, and then we will place the buy limit right on it. So you can see within the first 10 minutes, you would already have a setup. And after that, you could literally be done for the day. And 1 to 2 will be right here. Okay, so this is our trade. Stop loss below the first candle low. Take profit 1 to 2. That's it. We just leave the charts, and then we check our MT4 after 1 hour to see what happened. Okay, or if our trade triggered. Because like I said, if your trade doesn't trigger till 11 a.m. New York time, you will delete it and you will end the day there with no setups. Okay, and let's play the price, and boom, a very wonderful trade. This one literally had almost no drawdown. It triggered and it went straight up, then it retraced a bit, and then it went back up and smashed the target. Okay, so I think we went over 4 trades. We had 3 winners and 1 loss. Okay, we literally backtested the current price action. We backtested today, yesterday, Friday, and Thursday. Okay, so you can see how easy this strategy is. Okay, so in my opinion, after this video, you should go ahead on the charts and backtest it. Okay, use the recommended pairs. EU, GU, NAS 100, and SPX, and backtest it, okay? Because it will become second nature, and after that, you could then go ahead and do whatever you want with it. But make sure you use proper risk management. That's my best advice, okay? So that being said, please let me know if there's any questions. Please let me know down below, okay? I will make sure to check every single comment out, so make sure to leave any questions or any feedbacks down below. And also, like I said, feel free to share and like the video if you found it valuable. Until next time, a very cool SMC trading strategy video will pop on the screen. You should go ahead and watch it. I am really curious to see what you will think of it. And that being said, I wish you all the best and take care.